All right, so we're just going to review crude and ES and see what happened and where the trades were. So see the daily. Why I'm pointing out the daily right now is it's really at a critical level. All right, so you see the market rally, pull back, and then rallied, and now we're at this pullback level. So this pullback right here, this is in pullback position. The market right now is in a pullback position, and you have that volume pressure and all of that stuff there too against this area. So this is where, if it's going to turn, see, it already tagged a level and immediately reacted. So we'll see if this is where it breaks. And already you can see the volume come in. That's 41 times 10,000, I think. Contracts traded at the high. So what am I trying to say here? You have rally, pullback. This is the pullback. It's at resistance. This is the hourly chart at resistance. Some selling coming in already. And you have high volume there, which is the selling. And now it has to either break or not, you know. So that's a lot of selling right here. I mean, I don't trade at this time right now, but this is the, you see this white wave right here? That's a lot of selling. And it tried to test and it's already rejecting. See that? Minimum, it's going to come down into this area right here. Anyway, what else was there any trade? It wasn't clear. So the market right here, it pulled back into the demand area, right? I was looking to trade it, but this 78,000, to me, it just wasn't enough. And when it pulled back on 101, you know, it wasn't good enough for me. I want to see low volume on the pullback, high volume on the rally, not the other way around. Here, and it basically took out the low, and you don't know if this spring is going to work or not. So this was the trade, though. The only reason is it goes into demand. Excuse me, it goes into a demand area and demand comes in. This is really that simple. Day trading is a support and resistance game. It's just support and resistance with trend. Support and resistance, higher support, lower resistance, etc. Where market comes back into a range of support, and this is the demand. So that means they're buying support. Now you got to get in on the pullback. Now, how you analyze the pullback, typically you should have high volume on the rally and low volume on the pullback, but this other way around, so I don't want to mess with it. Nevertheless, it still worked. All right. Now, the other one is really important. You have the daily on the crude. You know, this is the rally down. There it is, updated it. You have a rally down, you have your pullbacks occurring, pullback, right? So you have rally down and then all of this shit, pullback. Now, you had this break and this selling. Okay, so we understand that, you know, the trading charge along with the daily is bearish. You have selling and you have pullbacks, right? So now, one second. That's better. All right, so the daily down and all this pressure and all that crap. So the last time you had resistance up here. Why? This distribution on the pullback occurred in the daily, and you had distribution and it broke. Okay, so why did it break? Because that volume was selling, and then it broke. So you have more selling. So now we go to a lower time frame or lower box size, and what was apparent was that this last break right here. You see this break? I mean, it can't get any more obvious. It's like rally down, right? So it just goes down, and so now you're gonna just look to get on the pullback, right? So it's just rally, pullback, rally, pullback, rally, pullback, etc., etc. All right. So you have that rally, you have that pullback, and you have a clear area of resistance. Look at this line of resistance. Look at this line of resistance and the break. When it comes into that line of resistance, it's not easy to break, you know. And when it came back in, what is this 46? This is distribution. If it was accumulation, you could say that this, the 44 right here, accumulated and caused the bounce, but I mean, they just went up and redistributed 46 and went down. So, you know, that's what happened. And now when we take a look at that, you see it goes into where? It goes into a resistance zone. I keep on telling this, especially to the white collar traders, because they're always looking at a chart and trying to read behavior, not focusing on the levels. You focus on the trend, then the levels, then the behavior around support and resistance. This is not my opinion. This is also how David Weiss used to do it. If you don't believe me, go take a look at his book. The chapter of his book, Where to Find Trades, is basically talking about levels. So the levels, and I think that's might have been the first chapter, where he compares to, you know, trades to finding fish. Anyway, I have time for going into that, but the point is, you have a break. Now you're going to get in the pullback, right? You're going to get in the pullback. So market goes into the pullback position. It goes right in here. This zone is the zone to look for trades. Why? Because it's fucking deep pullback. All right. So it's a deep pullback, and because you can get support and resistance many different ways, right? You can get it many different ways, drawing lines and all of that, but I hate drawing lines. So one way to do it is you can actually get support and resistance from point and figure, and it can be automated. So it's very good because the chart itself, the characteristic of that chart itself, allows you to seek support and resistance levels, and that's about it. I mean, the two things point and figure were used for, at least two things. One was cause and effect, meaning trying to project a target. But for day trading, it's better just to use for support and resistance, because the target, cause and all of that, it's better to see it as accumulation and distribution areas that serve as support and resistance, and not think of it as a magical way to predict how far the market's going to go, especially on shorter term, because there's a lot of inactivity for long periods of time during the day, earlier sessions, and the market will just go sideways and it'll create a big base, but that big base is a big base of nothing. All right. So anyway, so you have the market, it broke right here in this rally, it pulled back, distributed right here in this area, and it broke down, and you see the hourly chart clearly show that. Now, where was the trade? Go right here. Trade was here. This was the change of behavior right here, and it offered two pullback entries. Either one of them, it offered one pullback entry right here and another pullback entry right here. So there's a change of behavior. This volume was early on in the morning, so obviously it'll be a lot, but it's 188,000, I think. And pullback 1, pullback 2 have nothing. 52, 19. 52, 19. What do you think is going to happen? Boom, boom. 188. That's the wave you want to use, because that's the rally wave, and the waves you want to compare them to the pullbacks. and it initiated the downtrend. So again, it's nothing more than support, resistance, and selling at and buying at those areas, which will start setting up the for short-term trading. You use the hourly chart, its corresponding PNF chart, the way I'm doing here, the PNF tape reading chart, the way I've built it out here, and 5-minute entries. All right, take care, guys. Bye.